Welcome everyone to this video where I'm going to explain to you how to trade one of my main strategies and actually one of my most rewarding strategies in June, breakout strategy. And I'm going to explain to you how to execute this strategy, recapping one of my trades from the previous week on Tesla. One of the main things that I'm looking for when I'm trading the breakout strategy is the higher time frames. And if the higher time frames are giving me a clear idea, that is where I'm looking for a breakout strategy. And as you can see here on Tesla, Tesla has been in a strong uptrend for the past few days or maybe even the past couple weeks. Recently it has been pulling back, and it pulled back into the 20 moving average on the daily chart. Around the 20 moving average on the daily chart, it finally found some sort of support and it closed as a tweezer bottom. A tweezer bottom is a bullish candlestick pattern, and this candlestick pattern told me that today, or maybe 28th of June, Tesla could actually find some sort of continuation and Tesla could be bullish on that particular day. The next thing that I'm looking for after I have found a clean daily pattern and after I have established my bias using the daily chart is switching to the 60-minute chart. And I switched to the 60-minute chart simply to find a range right there. Why specifically a range? Because a range is the accumulation phase. That is the beginning of the move. And no matter what setup you are playing, you always want to catch the beginning of the move. And basically, there is no way better than looking at the 60-minute chart to catch that beginning of the move, because if you break that 60-minute range, you're going to get some nice momentum that could get you an amazing risk to reward ratio. You can also clearly see that if we break this range on the 60-minute chart, there is nothing else left ahead of us except for that week. So that is also giving us a great risk to reward. Now let's go to trading terminal just to show you how I executed this trade real time. So after I have built my bias using the daily chart and the 60-minute chart, I'm starting to look at the smaller time frames, which is the 1-minute chart and the 5-minute chart, to get that good entry into the direction of the daily chart and the 60-minute chart. I could see that in the pre-market we were sitting in some sort of range and we started pulling back into the previous level somewhere from the past day around here and the pre-market and after hours. On the 5-minute chart, we are having a bullish engulfing pattern, and now we're getting above this bullish engulfing pattern. This is something that we call actually bullish engulfing crack, where you have a bullish candle fully engulfs the bearish candle and the next candle breaks the high of it. You can also see that at this stage we're kind of breaking the pre-market level, which could also result in some sort of decent momentum. On the 1-minute chart, there is kind of a bull flag forming in. You could see that we're going from the bottom to the high. From the high, we are pulling back, and after the pullback, we're continuing above the high of the day that coincides with this level around here. What I did when I played Tesla is that I started accumulating my position. And I started playing it at 934, 935, a bit maybe at 936, a bit at 937, when it was actually better for me to wait for the full pattern to form and play it only after this breakout has happened. And this happens sometimes because of the FOMO. You get that bias that I have a great daily chart, I have a great 60-minute chart, I have a great 5-minute chart, and I want to be in this trade. Because of that, sometimes we rush our entries when it's just always better to be patient. Because if you miss one trade or two trades, there is nothing wrong about it. There you'll still catch the perfect opportunities like this. And it's always better to be in the A+ setup, a setup that has literally everything in it, rather than getting a few small stabs and bleed slowly before you finally catch that winner. How do you manage this trade? You can manage this trade two ways. The first way, like we mentioned, is by looking at the 60-minute chart. And on the 60-minute chart, there is a small area around here that you could take a partial at, and this is where I started taking some partials around here. And the second area is up here at 257.90ish. Another way to manage this trade is by looking at the average true range, and the average true range tells us approximately how much the stock can run on average intraday. And Tesla has an average true range of $10. That means that intraday it could run for approximately $10, going from 249 approximately to 259. You could go for the daily average true range if you have a clean daily pattern similar to what we had on Tesla around here. So that's basically it, guys. To recap, to play the breakout strategy, you need a clear higher time frame setup. It could be on the weekly, it could be in the daily, it could be on the 60-minute chart. It depends on the time frame that you are playing. For me, it's the daily chart. After that, I'm looking for an accumulation phase on the 60-minute chart, and I'm trying to get my entry at the beginning of the breakout of the 60-minute range, just to make sure that I can get some momentum after the breakout area. My target is either 80% of the average true range or key levels based on the daily chart. An amazing confirmation that you could actually get is an ignition volume after the breakout area. So if you are getting an increasing volume at the breakout of the 60-minute range, you could load in heavier and you could have a tighter stop loss. If you enjoyed this video, make sure to hit the like button, share and subscribe to our channel, and I'll talk to you on the next video.